Welcome, welcome. I'm Jody Omlands with eXp Realty, and I am with Austin Jackson of Guild Mortgage to ask so many questions. I'm so excited.
I'm excited to answer them.
All right, so just from the beginning, how does someone know if they are financially ready to buy a house?
Well, I mean, there's many ways to be financially ready for a house. And I
Yeah.
think a lot of it's going to depend on your preferences, right? So, it boils down to three things for an approval, and that's cash, credit, capacity. Luckily, there's options for all of those things. So, regardless of where your credit's at, regardless of your cash position or your debt to income ratio, there's always an option for something.
So what is the difference between a pre-approval and a pre-qualification?
It's a great question. Nobody knows. So really, the difference between a pre-qualification and a pre-approval is pretty drastic. So pre-qualification means that you've submitted an application with a lender, your credit's been pulled, and it fits the qualifying standards of that program. Nothing else has happened. Now, a pre-approval, we've done both of those things. We've also documented all of the things that you've put on your application. So your pay stubs have been submitted, your bank statements, anything that's important to that underwriting approval. Most listing agents know the difference between the two. So if you get pre-qualified and submit an offer on a house, that listing agent and that seller know that we haven't really looked at anything. So they may not take your offer as seriously as they would with a pre-approval letter.
So the pre-qualification is kind of nice because it's not a hard pull on their credit.
Right. Yeah, we can do a soft pull on it. It's a good way to dip your toes in the water and kind of see where you're at for a mortgage, but it shouldn't be the method of obtaining an offer on a home because you may not get that offer accepted nearly as much as a pre-approval letter would have.
Oh, I love that. So I have a big question for you.
Okay.
So we get the pre-approval letter.
Mm-hmm.
We're going to submit an offer and it's Saturday.
Okay.
Are you available to help change that pre-approval letter?
If my phone is working, I am available. So here at my office, we don't believe in banker hours. 9 to 5 is a thing of the past. So my cell phone is the only thing that people get. You can contact me evenings or weekends, and happy to update a pre-approval letter at any time.
Love that.
You're more likely to make an offer on a weekend than a weekday, so I need to be available for you.
I love that. So they got the pre-approval. We're going to make an offer, but we got that pre-approval letter from you a few months ago. How good is it? How long is it good for?
Good question. So I generally tell people my pre-approval letter says 60 days on it. Now, what that means is that the documents that you provided, your pay stubs, your bank statements, anything income or asset related expires after 60 days.
Okay.
Generally, I tell people if you didn't quit your job or spend all of your money, I will reissue a pre-approval letter. I will not after 120 days, which is how long it takes for your credit report to expire. So I want to repull credit. You basically have about 4 months, given that there's been no drastic changes to your income and asset profile.
What's the difference? A lot of people get confused. They save up their money. Mm-hmm. What's the difference for your down payment versus cash to close?
That's a great question. So oftentimes people call and say, I want to put this much down. And I say, great, that's how much you want your cash to close be? And they're like, what does that mean? So you've got two different methods of cash to close here. You have your down payment, right? Where it just goes towards the sales price of what you're paying the house for. So you owe that much less than what you bought it for. Your cash to close consists of that and your closing cost. So there are fees for all the people that work on your loan or transaction.
There's a lot of people.
A lot of people. There's the title company, there's me, the mortgage lender, there's an HOA, there's taxes, insurance, all the government entities. Those are your closing costs, and those two things together make up your cash.
Okay, so I want to buy a house, and are there any steps I could do to improve my credit score, or what should I be looking at?
There's plenty of things that you could be doing, but I generally tell people don't go through it in the dark. Let a lender help you. So one of the cool things about Guild is that we offer credit simulations up to 12 months where we can actually, if it's a credit thing that you need to work on, I can tell you exactly how to work on it. I can look at your cash position. I can look at your employment. Let's identify if there's anything that you need to be working on. That way, you're not looking to buy a house in 60 days. It's a year from now, and you've got a year to work on all of those things. Or I just tell you don't need to work on anything. You're golden.
Right. Yeah. So what happens if you see they're maybe not ready?
Then we build a game plan. So whether it be a savings game plan, a credit game plan, we have all the tools available to help you get into the position you need to be when you're ready to buy that house.
I love that. Yeah. So you kind of hold their hand.
All the way. I tell first-time home buyers all the time, I will hold your hand throughout this process. I tell a couple of seasoned home buyers as well.
That's wonderful.
Yeah.
I do have a lot of clients who are older that are maybe empty nesters.
Okay.
that want to give their kids a gift.
Okay.
How does that work?
It's very simple. So oftentimes people will actually mess it up before you actually contact a lender. So they'll write the kid a check, put it in the bank account, and then call the lender. Please don't do that. You just created a mountain of paperwork for yourself. We can use it, but it's a lot. Gifts are very simple. Your gift donor signs a gift letter to the lender. We provide it. Very simple to do that. We have them wire those funds to the title company, and they're sitting there waiting on you for you to close.
Okay, so what if your income fluctuates? Like, I'm commission based.
Me
My
too.
income is completely different every month.
Right.
And I got some side hustles. Lots of people got side hustles. How does that work into the equation?
So it depends, right? If you're a W-2 employee and you're a commission earner, it's averaged over 2 years. You can get away with lesser averages, maybe up to a year, but generally, it's fluctuating. So we're going to use averages to qualify you. If you're self-employed, it's a completely different process. So for self-employment, whether it's a side hustle or your primary, we're looking at your tax returns, and we're looking at your write-offs and expenses and deducting to get your adjusted gross income, which is great because we have a lot of self-employed options for people that write off too much in expenses and that sort of thing. We've got loans tailored for those people too.
I love that.
Yeah.
All right. So do you have a couple of programs that you're excited about to offer clients?
Yeah, I mean, I'm excited about all of our programs, right? But there are some favorites that I have and some new stuff that I'm excited about. We're a large VA lender for veterans. Love doing VA loans.
Go VA!
Absolutely. That's probably one of my favorites as far as just your basic core programs. We've got some exciting stuff as well. We offer bank statement loans that are in-house. I-10 programs for those that don't have a social but an I-10 number. We offer 40-year loan terms, interest-only terms for self-employed people that are trying to grow their business and need cash flow. A lot of things that we offer there that a lot of lenders don't. Most of them being as low as 10% down, which most are requiring 20. So
Wow.
Very good stuff.
What about manufactured homes?
We offer, we do manufactured. So, there's lenders out there that do manufactured, not many that do single wides. We will even do a single wide home. Guild Mortgage was actually created out of a manufactured house in 1960. So in my mind, I like to think that we have a soft spot for manufactured, and we will always do loans for manufactured homes, but single wides, double wides, modular, it doesn't matter. We do manufactured homes.
I am ready for a big question. What do you need to be approved? What do they need to submit?
Yeah.
What are the do's and don'ts?
Yeah, so pre-approval, I mean, everything in my world starts with an application. So you're going to submit an online application typically where you fill out all of your borrower info and 2 years of employment history and 2 years of address history. I usually relate it like going to the doctor. You don't walk into the doctor and say, my throat hurts, give me medicine, right? They come in, they check your vitals, they do blood work, and then they give you a diagnosis.
It's a great analogy.
Yeah, well, the blood work is the documents, right? I need your pay stubs, your bank statements, all of the things that support that file that you just submitted with me. Get those documents to me. I'm going to run my test and look at it all and give you a diagnosis of a pre-approval.
All right. So once they have the pre-approval, they put an offer on a house. We're under contract. What do they not do? What do they not do now?
The age-old question: you don't buy a car.
Don't buy a car.
Don't buy a car. So
don't buy a van, or you're going to live in it
Yes.
down by the river.
Yes, you will not have a driveway to park that car in. But no, I mean, generally speaking, just you're not opening debts. No large cash deposits, no large purchases, not with at least checking with your lender, beforehand. I mentioned that financial family. It's more me keeping an eye on you so you are able to buy that house. But generally, the big thing is debt. Don't open a new credit card, a new auto loan, anything like that, because you're going to suffer on the approval part.
Yep.
Yeah.
You heard it here. You heard the rules.